Okay, good morning, everybody. Simon Campbell here, RTCTV, the morning show. Welcome to the broadcast. It's 8 o'clock on the 21st of November. I can see our host and presenter, Zach Meir, is in the room. Good morning, Zach.
Good morning, Simon. How are you?
I'm very well, thank you. Good to hear your voice. Are you getting ready to sell that big stack of Bitcoin after it broke new highs yesterday?
Well, yes, actually, somebody asked me during the day whether they should pile into Bitcoin, which obviously turned out to be a bit of a red flag there, but I didn't want to put them off.
Put them on the spot. Great. I'm going over to your screen just now. We've got at least three speakers with us this morning. We're going to obviously go across to you first, and then Russell Jones is going to come in for his take on the day's markets. Then we're going across to George Hallmey at Click Events, a swing trader, and then we're also going to be hearing from Alex Ong, who is a portfolio manager and trader at Traders Corner. So let's get started and see what we're looking at today, please.
Right, my dish of the day is, as you can see from my screen, I hope, is QIAGEN, which is a Dutch company quoted on the Nasdaq. Provider of it's a rocket science, but provider of testing technologies used in pharmaceutical research, has a $7 billion market cap, so pretty chunky company there. You can see recently on the chart what sort of support just above the $30 area. Situation here is that it's allegedly being looked at by a European company, Novo Nordisk. Novo is looking to buy a 25% stake in QIAGEN, or possibly go for a fully fledged takeover. They've been advised that obtaining a stake in QIAGEN is not going to be easy, as big institutions are keen to stick to their holdings. Obviously, the whole life sciences area and the whole drugs area are very hot at the moment and expanding rapidly. The rumor is that a full deal for QIAGEN would have to fetch $45 a share, especially if one of the majors, such as Roche, decides to enter the fray. And for those who are sticklers for detail, it's always in an M&A situation, they will say, so who's the advisor? It's said to be Citibank in this situation. So that's QIAGEN, which is my M&A dish of the day.
Fantastic. Thanks, sir. We have Russell Jones in the room, so I'm unmuting Russell's microphone. Good morning, Russell. I wondered if you want to chip in. I get the sense you might have an opinion yourself.
I'm not on that particular stock, if I'm honest with you. If I'm not strong on a particular position with knowledge, I'd rather not give an opinion. But
Okay.
in terms of the overall markets, yesterday, and obviously going back on a couple of things I mentioned last week, there was three reasonable performances which came out from stocks I recommended last week. Tencent in America went up 3.9% yesterday. They're now over 500 million capex in terms of market valuation. That 3.9% increase is on the back of two IPOs, which has been done from subsidiary companies of themselves. They continue to grow. It's one for long-term, the never portfolio, and it continues to grow, obviously, with Chinese markets growing. Alibaba went up 1.6%. Again, whatever happens in the rest of the world, China still keeps on soaring ahead. Alibaba yesterday morning, although I didn't mention it, did do an acquisition. They bought a proportion of a food retail company, which basically widened their shopping basket, as they called it in the Times. And they had a 25% reduction on the closing market price there on a company which is based on food retailing, rather like Home Foods for Amazon. So those two major caps continue to progress irrespective of what happens in the rest of the world. Go Compare, I mentioned it last week when they were at 101, had a bid from a private now from Zoopla. When you look at the housing market and the housing sector, that adds them to have the insurance and selling facilities which are not on Rightmove. The target price was 110 for the bid, which was rejected. They hit 110 yesterday, which was 6.9% up. I said that I think a new bid will have to come in at 125. I may be wrong, but I cannot see that price stopping up that figure and getting the acquisition through. As we look this morning, Go Compare is literally on a range of 108 to 109, so there's no real movement. The increase was at the tail end of the day. Looking at results, I looked at 6 companies which results have come through. I'm surprised at the market reaction to EasyJet. EasyJet currently at 4.1% and gaining, so they're at 13.30. They came in passenger numbers of 9.7% up, and they were within their profit target range of 408 million, which included a forex charge of 101 million. Now, obviously, there's going to be further consolidation within this sector. We are aware of the Ryanair problems, Monarch going through. They've done an acquisition in Germany, which obviously, hopefully, they'll see some profit increase. But I am surprised, but they were 19.33% up year to date prior to today's move. So that may be, for some people, worth investigating. Do they want to put money in there? Do they think it's going to be a further gain? Obviously, the market feels it is, with them being 4.1% up. AO World, that's the second of one. It hasn't really opened up this morning yet. I think it's because the results are so poor. Although they declaring revenues up at 13.3%, this stock is down 29.88% year to date. So although they've singing their praises, their increased marketing costs, which are essential to actually get their frontline spend, which has gone up, has resulted in losses of 6.3 million compared to 1.5 million in the comparable period, but the losses for the group are 12 million now. Losses per share 1.9%. I suggest that's a total avoid, or alternatively, if you do short, it's a short. Kingfisher, I did work for this company for a great period of time. I ran most of London for B&Q. That was obviously until 2014. Sorry, 2011. Their results, I think, are average, to say at best. They've been going through this transitional period, from my own knowledge, for years. Whichever CEO or chairman comes in, they always have the same principal idea of merging ranges, getting buyer benefits from the French and other European parts of the industry. They're down 1.4% this morning. I think this is a total avoid. The only part of the business which is growing is Screwfix. They operate in very small units with a high transactional value, with great everyday pricing. But Kingfisher overall is struggling with the large warehouses. They've already closed over 60. As soon as the less profitable or loss-leading warehouses, if you take a big warehouse as an example in the UK, which could be over 100,000 square foot, the typical rent is over £5 million. Combine that with the rates, combine that with the staff costs. Typical unit used to have a staff cost in excess of 4 million. Although the gross margins are 43%, in effect, this is an avoid. So Screwfix very good, but Kingfisher struggling. They're down 17.3% prior to year to date, prior to today's drop, which was 1.5%. Compass Group, massive organisation, obviously in the catering. I thought they were fairly bland results this morning, and it's reflected in the market. They're down 1.8%. Compass Group have increased their final dividend by 5.7%. Their profits are up by 15.1%, but it's nothing exciting. So obviously in a market where obviously something's got to stand out, or it's got to be new in terms of tech or whatever, Compass Group is not being seen as a buy in the market. Two stocks which I was going to cover, which I don't normally cover, which I expected to be strong, and they have been strong, and the results have come out this morning. HomeServe, currently up 4.5% on the day. They're 33% up for the year. HomeServe is obviously home emergency repair and heating installation support. Their revenue was up 16%, profit up 12%. Dividend is increased by 15% to 4.7. A smaller company, hence you can get greater growth. I will be buying stock in this share this morning. I think that although it's on low volumes, this is one that is going to continue to grow. So I will be buying that myself personally. And then lastly, Big Yellow Group, which again, 11.5% up year to date. They've opened up flat, which I thought they'd be a little bit stronger. 6% growth in revenue, 6% growth in like-for-like, profit increase of 13%. They've got new sites in Wapping, Slough and Bracknell. As the housing market goes through a further transition, and people obviously are going from buying sometimes and then selling and then going into a rental situation, this group has definitely got a space. When you look at its sector, some of the growth in that sector has been superb this year. So that's my highlights in terms of the markets for the day of the 6 results. Surprised at EasyJet. Do believe that HomeServe is a buy. Kingfisher and avoid. AO World is a short. Big Yellow will also be a buy.
That's the other point there was that, thank you, Russell, but the other point there was that Tencent has beaten the market cap of Facebook, so that just gets everything into perspective of what a giant it actually is.
Oh, it's massive. Come on.
Yeah, and the other point there, presumably shareholders in EasyJet are celebrating the departure of their current CEO, so maybe that's also lifting the price. I think that something exciting might happen after Dame Carolyn departs.
Yeah, well, she's getting 5 million anyway for departing, which is very nice for her. But on saying that, you know, going back to Tencent, I can't re-emphasize this. You know, whatever people say about China, you know, I've got a friend that's currently been out there for about 4 months in Kunshan, which is about 50 kilometers outside of Shanghai. He's a professional golfer doing lessons, basically. And it's a cash-rich society. People underestimate how much cash is out there. You know, I was going to mention yesterday, you know, with house builders as an example, you know, 66% of the Hong Kong property market is being bought cash. Because the Chinese have had restrictions on moving their money abroad, which resulted in the likes of Canada putting 15% surcharge on foreign buyers, 75% of overseas purchases of property come from China, which you can probably relate to with the London market. As they've done their restrictions, they've got to still spend money at home. Tencent has 960 million users with WeChat. They make most of their revenue from WeChat, financial services like Alibaba. People don't realize that in China, they don't use cash hardly at all. It's all through their phones, like we might do a quick flick on a credit card or a banker's card on a £30 transaction in a small newsagent. That everything is on their phones.
So they're actually ahead of us in that respect, in the payments area.
Massively. And the other huge market they're in is obviously the games market. You know, and we don't think about, you know, we can talk about the movie industry, but they're the largest in the movie industry as well, with their people with a 1.4 billion population. So Tencent and Alibaba, there's others I can mention, but those two really are your never fund. Sticking 5 to 10% of your portfolio into China is a no-brainer now. It could double every 2 years, and I say that, you know, and I mean it seriously.
Okay, and just looking at the movers of the day, you can see EasyJet just getting there on the leaderboard of the all share there, up 3% at the moment. And I think SIG was another company reporting today. That's probably one of the best movers of the day as well.
But SIG was a company I was tipped about 12 months ago into insulation products, mainly exported to Europe, and a hell of a mess. Lost their CEO and a few other issues. I actually was talking to a friend at the time who was talking from the south of France, just outside Cannes. And he was with a chap from SIG, and they were going through a complete market and sales change. We both scoffed at it, thought that it was on the point of, you know, going the other way. And yet, if you look at the increase for the year, they've had a fantastic run, and it continues to run.
Okay, well, thank you for that, Russell. Another financial Wikipedia update there from you on every stock that matters this morning in the London market, and hopefully we'll speak to you again at the same time tomorrow.
No problem at all. Have a good day.
Cheers. Over to you, Russell. Oh, sorry, over to you, Simon, rather. Let's get my brain in gear. Well, if we don't have Simon, I will go on to what I was possibly going to go on to before, or in a few minutes. But just the opening market movers there on the major markets. Just looking at the euro at the moment, interesting to see really whether this base here towards 117.20 is going to hold. Obviously, fears over the German political situation at the moment. Interesting that this time yesterday we were toying with the pivot of the day around 117.90. Today's pivot's obviously low because the market's come down 117.54. Normal rule is that you'd be selling towards the pivot. Yesterday that sort of worked, so there was a bit of an overshoot, but it came back from there. We'll see whether the euro is strong enough to sustain its pivot level of the day today. Moving on to the other markets, relatively dull on the equities front. You can see that the FTSE's down around 10 points, 73.76, being vulnerable really below or at or below the 7,400 zone in recent days. As you can see, this is the 15-minute chart. And again, this is struggling at its pivot level, 73.80. The area there was already had a dip down towards first support, 73.60. That gap is negative as far as technical traders, or at least as I would be concerned. So it is rather tempting to sell into any strength at or above 73.80, at least in initial moves on the FTSE 100. Dollar Canadian normally moving quite sprightly on any day, but today on the bullish tack, support above the pivot there, 127.97, so possibly up to 128.40 first resistance as an initial trading idea. And obviously the pound was important for us. Similar setup in a way to the Canadian dollar, where support early doors has been at or above the pivot, 132.32, and heading possibly towards retesting, I suppose. So the obvious thing is retesting yesterday's resistance at 132.80. But this looks like quite an encouraging setup here with a move higher that we saw yesterday, only retracing about a half of that move and then looking to push higher towards a retest of 132.80. So the pound looking stronger despite all the political woes. Obviously today we'll be hopefully finding out about the discussions regarding the Brexit divorce bill. I have suggested that I might take legal action if even a penny is paid, but perhaps the government might push it through anyway. So 40, 50 billion pounds in the bin, I would suggest. Just finishing off with gold, bit of a sideways track after the rather sharp fall that we saw yesterday. What was that, $20 or so, approaching the pivot level, 12.81. One would probably expect that to be the selling zone or the shorting zone, struggling to get even up to that level at the moment. So possibly continuing the sell that we had from yesterday on gold. I hope that Simon is around at the moment. Are you there, Simon?
Oh, we seem to have lost sound there momentarily. I'm back. Can I just ask everybody if they can hear me? Okay. Don't know what happened there. I think we've lost Zach as well momentarily. Okay, well, let's go.
No, I'm here, Simon.
Oh, you're still there. Sorry, Zach, I don't know what happened there.
Well, I lost you, but I don't know whether people heard my magnificent soliloquy or not.
I missed it myself. What were you saying?
It's one of my best efforts. I thought a good rundown of the whole markets, telling you what's going to happen for the rest of the day.
I just
It was
caught the last
invaluable.
bit, yeah, where you said, and that's how you make the million. Um,
Yes.
well, we'll have to wait until tomorrow to find out. Okay. Thank you. What I was asking on the back of the Brexit comment you made, I was just saying, what do you think about the cost that we're seeing between the sort of the politicians, because things are starting to there's a lot of acrimony, shall we say, starting to go into the Brexit negotiations. Do you think there's going to be a cost there going forward, no matter what the divorce deal looks like in its final guise?
Well, I think the first thing to say, just in case people think I'm a sort of raging Brexiteer, I don't really mind what way it goes, or didn't really mind, as long as it was the best for, obviously, the UK. I think the situation now is that I don't actually see that. It doesn't seem to be very democratic that you take a vote on something. If you vote one way, you'll lose £50 billion, and if you vote the other way, you won't. That seems to be sort of almost like menaces, really. And the situation now, I don't think the UK. I mean, you even hear people like John Redwood saying we should be paying 30 billion or 50 billion as if it's confetti. I don't think this country should be paying anything at all. There was a vote. People didn't want to stay in the EU by a very small margin, and why should we pay any money? Part of the reason for leaving was to save money. There's no point having 3 or 4 years costs or whatever it is as part of that deal. So it's amazing how it's a total fiasco. I think we're in a total muddle, and it's amazing, I suppose, that the FTSE and the pound and all our other assets are still okay, let's say.
Yeah, indeed. We're going to move on, if that's okay, to our next speaker. Now, George, I know you're in the room. I'm going to ask you to wait just another 5 or 10 minutes first, if that's okay. We have our speaker, Alex Ong, who has an appointment to go to. So let's go across to Alex now and bring him in. And George, if that's okay, we'll come to you straight after Alex. Alex, your microphone's off now. You should be able to hear me okay.
Hello, sir. How are you? Can you hear me?
Very well, thank you. Very well. Good morning to you. Thanks for joining us. Alex Ong from Traders Corner. What's the best way to describe it? I know you run a portfolio fund. You do some mentoring. You have a daily.
Yeah, I think just overall market junkie with my brother. We invest and trade literally anything that moves and anything that can make money. So this morning we'll talk to you about some of the FX markets.
Fantastic. That's what we were hoping for. Zach is also in the room and is speaking. Zach, I don't know if you two have met before.
I met most people.
I have a pleasure of meeting Zach face to face. So.
Pleasure to meet you, sir.
Nice to meet you too.
Okay, let's go, Alex, across to your screens. We're doing the screen share.
Hello?
We're doing the screen share now, so you should be able to confirm your screens. Great. Okay.
Can you see my screen?
We can see the Aussie CAD, and we're looking at the right screen, I believe.
Okay, wonderful.
Let's have a look. What are you looking at?
Okay, so basically, I mean, I was looking at a bunch of the pairs yesterday and this morning, and I think looking at some of the majors like the euro, euro dollar, pound dollar, they're a little bit more uncertain, and I quite like the look of some of the Aussie pairs at the moment. As we know, the Aussie pairs have been in a bit of a downtrend recently. I think that's going to continue, to be honest with you, for the foreseeable future. However, I do think it's also interesting because we are at some key levels for a bunch of them. I don't think that this is by any means a trend reversal, but I do think that we're going to see a little bit of a pullback, which will give us an opportunity to start shorting these pairs at better levels. So from a trading perspective, you can do two things here. Well, I'm indeed going to do two things. I'm first of all going to start buying. So if we look at the Aussie CAD to start with, I like the look of, if the market starts to break above 0.9720 or in and around that area, I like the look of buying this up towards the highs here at 0.9900. And then once it gets up there, I'll then start looking for shorting opportunities again, so another opportunity to take this lower. Having said that, if we do get the market break beneath this level at 0.9646 and hold below there, then all bets are off as far as the long goes at that particular moment in time, because we would have broken a significant structure level all the way to the left here back in January of this year. And if we break that level and we hold beneath that level, then I'm going to be piling in on the short side. Now, the great thing that I like with these trades at the moment is that we've got a selection of trades that we can take. So if we take a look at the Aussie franc, it's looking like it's doing the same thing. So we're at a relatively significant structure level. Previous resistance is acting as support. It's going to give us an opportunity to get long. But equally, as I said, if the market then starts to break lower, then we can take some shorts there. And the reason I say that I like this is that we don't necessarily have to be, the earliest to the party. We could wait to take direction from one of the other pairs, and then follow suit, a little bit later. So wait for a little bit of confirmation. It really depends how aggressive you're being. I mean, me personally, I usually take the first trade, and then maybe add with one or two of the others to mitigate the risk a little bit. But as I said, for more conservative traders out there, they can wait to see how one of them plays out and then perhaps follow suit on one of the other pairs. The Aussie yen is looking particularly bearish for me. Not only are we at this structure level, but we've also broken if we look at this on the daily charts, we've also broken the upward sloping trend line here, which connects the lows from June 2016, and then a year later at June 2017. We've now broken that level, and we're just kind of playing with this structure level over here at the 84.60. I say if we get below there, and indeed below the 83.82, then we really could see the market open up to head towards 81.80. Having said that, like with the other pairs, I do think we're going to see some sort of a bounce from the Aussie in the coming weeks. So it may be, and there isn't a way that I can really see to play this to the long side at the moment like the others, but it may be that we get a better opportunity to short when the market retests the upward sloping trend line over here. If we move on with the Aussie New Zealand, the Aussie New Zealand's not quite as pretty. In this one, actually, I'll be looking to take this long. I don't think there's as strong a case to take this short, like with the others. So I'm looking for a long opportunity above 1.1140. But the price action isn't looking as beautiful as it could be. But if we take a look on a lower time frame, you'll see that it's a little bit more clear cut. But having said that, it's not as nice a trade as some of the others that we've just looked at. Finally, if we look at the Australian dollar, this is very, very bearish. And this is the one that I think pulls all of the other Aussie pairs lower. We had the RBA minutes come out last night, which is negative. So things, the data out of there is looking particularly bearish at the moment. And I think that really we're going to see this head lower in the coming weeks. By year end, I don't see it being higher than it is at the moment, even if we get a slight pullback to this recent area where it's just broken. So we've just broken a structure level over there, had a bit of consolidation, an opportunity to short here, which paid very nicely. I think the market will go a little bit lower, pull back a little bit in line with the other Aussie pairs that we've looked at, and then eventually go lower. And this will be the pair here that pulls the rest of them through their relative structure levels. As I said, as far as the other majors go, Euro dollar, I think, goes higher. It's a little bit untidy at the moment, but I do think that it goes higher if we can get above this trend line here. I know Zach mentioned earlier that he was looking at this just trading above or around its pivot point at the moment, and if it can hold above there, then maybe we go long for the day. So this kind of lines up with that. The pound dollar for me is a little bit less straightforward. There's a number of different ways it can go. Really, I think it's quite heavily weighted at the moment. So I'm looking for a break of this trend line in order to then take this short. Finally, if we look at the dollar CAD, which is one that I particularly like at the moment, I think that this is going to go lower once we get a break of this trend line, but that may not be before we get a test of the level, the structure level at 1.2983. That wraps it up for me. The things I'm looking at in the FX markets at the moment. There are a number of other opportunities out there, but I think really this is the most clear-cut one, or most clear-cut ones to me.
Alex, just a couple of points there. One of the issues for me, I'm sort of obsessed by Bitcoin, as I've said so many times here, that that's a very volatile market. Do you see volatility coming back to the currencies now? Is it getting better than it was, say, like a couple of months ago or in the summer?
Yeah, I mean, I don't think that. Obviously, I think we've had quite a lot of volatility this year in the currency markets. Obviously, prior to the summer, we've had some consolidation and some pullback since then. December for me is a bit of a strange month. I've been sat there in December with sod all to do. In years gone by, then there have been other Christmas months where it's gone absolutely wild. I think that the markets are at key levels at the moment, which, as you know, will provide catalysts for the currency pairs to move. So they're kind of not in the midst of nowhere. They are at areas where the markets are going to be interested in getting involved, whether that be as a buyer or a seller. They are at significant levels currently.
Okay, well, we'll see how that pans out. Thank you very much, Alex.
Thank you very much.
Alex Ong from Traders Corner, thank you very much indeed. We'll let you go. Hopefully we can get you back again soon. Good to speak to you.
Absolutely. Thank you very much. Take care, Simon. Take care, Zach. Thank you.
Okay, thank you very much there to Alex Ong. Okay, Zach, we have George Hallmey now, who's been waiting patiently to go. So shall we go across to George now and bring him in? I've got to be careful whose microphone I unmute. There's lots of people checking in all the time, and the list is shilling up and down as we speak. George, I think I've unmuted your microphone now. Good morning to you.
Yeah, absolutely spot on, Simon. You've hit the right button there. Good morning, Simon, and good morning, Zach, and good morning all.
Good morning.
Good to have you here. Sorry to keep you waiting. I know you were expecting to go a little earlier in the hour, but we've just got a lot to get through. It's good to hear all the information. Now, you, George, are one of the people that used to be a day trader, sitting at the screens all day, but I know you've sort of whittled that down to roughly sort of 20 minutes a day, and this is round about the time where you do your 20 minutes, having founded the extreme 20-minute trader system and the harmonic wave. You've managed to develop your systems, but of course it does require you to keep a fairly close eye on what's going on in the overall markets. So let's go across to your screen. I should have done that already, and let you bring up the charts. Maybe you can just give us an insight into what you're looking at and what's catching your eye in the markets at the moment.
Fine. Okay. Now, hopefully, you can see a chart of gold, and what I'm looking at here is
I'm looking at that, and if
excellent,
just a little while in the box, everyone to let us know that you're looking at George's screen. It's a black screen of the gold.
Right. Always a good sign when the technology is working.
Everything's fine. Okay, over to you.
Good. Fine. Yeah, I mean, thank you for the introduction, Simon. But there was a time when I traded sort of quite heavily intraday and had no time for the longer term stuff. And over a while, sort of lifestyle things sort of get in the way of trading sort of during the day, and consequently, I made quite a shift. But I think I probably need to go to a couple of sessions of Traders Anonymous, because I think I've fallen off the wagon to some extent, in that I'm going back to doing some intraday trading, and it's something that, particularly with the winter months, when getting out in the sunshine and boating and what have you is not quite so desirable. There's a little more time to maybe look at markets. So yeah, I'm combining the two these days. I've got four markets I just want to look at, and they're all a little bit of a conundrum. And the first one, of course, is gold that we're looking at. And as we can see, with this is a 4-hour chart. It's a 4-hour chart. we've got a low October low, 27th of October, and then we got a higher low, we got another higher low. Now that's generally a good sign, and if we look at this in general, it's a consolidation pattern, and it's running sort of more or less sideways. And what very often happens with a consolidation pattern, a sloping consolidation pattern, I hasten to add, is that they can break into a strong uptrend. They can break into a strong uptrend. So it's a sort of a multi-point reversal where we've got this succession of higher lows, higher highs, and then eventually you get the breakout. Now, we're starting to get a little excited last Friday, and we got a breakout. In fact, we had a very, very strong UK afternoon. On up it went, and we're looking at volumes and so on. Volumes really increased quite nicely. And then along came Monday. And what happened on Monday? It was slammed down. Now, I would use the word slammed because it seems to be a feature of gold on a good many occasions when we have a trend that kicks off moving higher. And then out of the woodwork come a whole stack of futures contracts on the sell side, and they completely and utterly overwhelm the buyers, and that's exactly what happened yesterday.
I wanted to talk to you about that, George. Sorry, I just wanted to interrupt there because that's something I've noticed. Well, I suppose you'd have to be blind not to notice it on gold, that it just seems to be slammed on COMEX. I mean, there's just somebody comes in with $1 billion worth of sell contracts, and that's it. I mean, this seems to be a market which is literally being held down. I mean, on a persistent basis. Is that something you have noticed?
Yeah.
Or?
Absolutely correct observation, certainly as far as I'm concerned there, Zach, that that's exactly what seems to be happening. It's not being allowed to rally. And if we talk about central bank manipulation, well, there is a big question mark here. Is it going on or is it not going on? Because quite a lot of the, when you sort of think back to the fundamentals, there's an argument to say that, well, it should be lower because what is going on with world economies, well, they really are stagnating, despite what we're told about the US economy in particular. We are in a deflationary environment. And of course, that's not good for gold. And on the other hand, are we on the verge of inflation? Well, we most definitely have got inflation. We've got inflation in all sorts of things. It's now really coming home to the man and the woman in the street, so that the money in our pocket is being squeezed like crazy. So yeah, there is most certainly inflation out there, which should be really good for gold. So of course we are constantly we're getting headlines that China and Russia are stockpiling gold, and they are going to be coming up with a gold-backed oil contract. So everything seems to be right for gold to perhaps have a little rally, maybe a big rally, and that's exactly what seems to be happening. We seem to be getting these big paper contracts suddenly flood into the market and just take out all of the bulls. So,
but you don't think that? I mean, what I was going to say is that if 5 years ago you would have thought gold would probably be around $5,000, $8,000 by now, given the buzz there was just after the GFC. That price is exactly where Bitcoin is. Bitcoin seems to have taken over from as a store of value.
Absolutely. I think Bitcoin is just really taking over from the fact that gold is not being allowed to move. And I think if gold were allowed to move, then maybe the desire to own Bitcoin might wane somewhat.
Yep. Okay. We'll go on to your other charts then.
We've got quite a few other charts now. I'm just going to show a correlation. Now, correlations, if I can just bring this one across, if it will. Now, hopefully you can see a couple of charts there. We've got gold in the top window, got US dollar, Japanese yen in the bottom. Hopefully you can all see that. Now you'll see a vertical line, and if I just move this to various places, the correlation will be obvious as I move it along. So I'm just moving USD JPY to various peaks and troughs that correspond to, well, peaks correspond to troughs in gold, and of course vice versa. Now, this is a correlation that has been running, and it runs and runs. And where are we right now? Well, where we are right now is that the USD JPY has actually been dropping back somewhat. And so for this correlation to continue, one would expect now us to be in a rally. And I suppose, yes, you can say that we have been rallying somewhat. And then we had the big down day yesterday. So correlations, well, correlations, I guess they're there to be broken. Let's look at the other correlation, which is the dollar index. Now, clearly, as gold is priced primarily in dollars, if we've got a strong dollar, we're going to get a weaker gold price, and vice versa. Now, this correlation broadly, where we've got the dollar falling, again, very broadly this year, we've had gold gradually moving higher, and then of course we had this reasonably strong move up in gold, which corresponded to an acceleration in the dollar index moving on down, and we've now got then the dollar index moving on up somewhat. So the next part of this conundrum is what is going to happen with the dollar index, and of course the dollar index drives so many of the other currencies, the euro in particular. So this is the next question. Where is this dollar index going? Yes, we've most definitely got a downtrend. It's as plain as day. And the rally that we've had is a three-part rally. It's an ABC move. And in downtrends, ABC moves are, well, they're meat and drink to downtrends. We get rallies, which are very, very often these ABC moves. And then price will break on down and it will continue the trend. And so that's the question. Are we going to get a continued down move, or indeed are we in the throes of a break of the major downtrend in the US dollar? And that's what I'm waiting to see to be resolved. And for it to be resolved, what I want to see, I want to see price then moving below this low. If it can move below this relatively major higher low in this rally, then we're going to see much, much lower levels here. But equally, it could decide that it's going to move on up and take out these highs. So we're stuck for a period of time. Now, we could run further out on this, and if we run out to, say, the weekly, then this is not looking a particularly pretty picture. It's managed to, this down move that we've had is managing to take out all of these pivot moves, which have gone to higher levels. It's dropped just below this prior one. But then if we go even further out and then look at the monthly, maybe it looks a somewhat different picture. Different picture in that from the millennium, we had the massive run on down after the tech boom collapsed. And of course, you know, there's that little blip around about 2002, 2008, which I'm sure we remember. But could this now be looking a reasonably bullish chart, just waiting to take off? So there we go. I've got no straight answer for this one, but I'm looking at it closely because I think we could find something really quite interesting developing out of all of this.
So perhaps a good trade for the new year on the dollar.
Yeah,
That would sort of give it time to resolve.
Absolutely. So, indeed. So, I mean, just again on the daily chart, I'm looking to see how this is going to sort itself out. And this is this key level. It's right the way down here. And this is the current level. This is where we are. This is where I'm looking to see if this is going to be resolved. So first of all, I'm looking to see, will it drop below 93.67, 93.50 region, and then that'll put in, I guess, a move down to this 92.90-ish region. And if that goes, then I think that's it. The dollar is going to be moving south rapidly. So anyway, that's that one. Those two, gold and the dollar, inextricably intertwined together. Now, in terms of gold, just looking on a straightforward downtrend move, and I'm going to call that the A move that we've had. The rally is the B move, and we just projected on down. I think there's every possibility that we're going to see gold down here at the round number of 1200, and that will correspond to this previous low, the July low. And the fact that it's not being allowed to rally, well, maybe they're going to want to push it down through this area of price action that we've seen set up over, well, the last month or two. And if it can go, well, I think we're on for quite a good trade on the downside. And that's where I shall be positioned if, and that's my red line, 1270 needs to break. Need to get a close
right,
below 1270.
So you're waiting in the wings really for the your strategy is to wait in the wings for levels to break and then act, rather than getting involved in the mess of the day to day.
Yes, we've all been there, where you get a market which is consolidating, and one of the biggest problems is to get an opinion in the market during a consolidation. You're on a hiding to nothing. The market has to prove itself. It has to show us which way it's going. Now, if I've got a few minutes, both, I just want to take a quick glance at the euro and cable.
Yeah, George, just a
we are.
couple of minutes, if that's okay, and then let's have a look.
I'll keep it really brief. Right, okay, the euro, where is it going? That's the big question. Weekly chart, we've had a really good run up, and it seems to have broken the uptrend. Is it moving down? Is it not moving down? Well, we had, and that top, we could see it was a head and shoulders top. It actually broke through that blue neckline, and it's actually achieved its first target. This blue line just shows where it came down to, and that's that target achieved. Now we've got a much bigger head and shoulders if we look at this, and this bigger head and shoulders could well, let me just run that down to approximately the neckline. This could see the euro move much further down. So in order to negate that possibility and get back into an uptrend, it's got to move above this level. It's got to move above this level of what have we got, 118.70. If you can get above there, then yeah, we're going to be on for another move on the uptrend. But the possibility of a collapse is definitely not out of the woods yet. And if you indulge me for another minute, cable, well, it's sideways. Where is it going? On the daily chart, haven't a clue. It's modestly trying to move up. But if we go out to the weekly chart, then we've got a trend channel. And the trend channel, and a feature of trend channels is that it will bounce between the channels. Well, we've had a bounce up to this upper channel, and we've had a bounce down to the low, And at the beginning of last week, or during last week, I have to say, around about the middle of the week, it looked for all the world that cable was going to collapse. But what's happened since then? Well, we got that low on Thursday, Friday, Monday, it rallies up. Could this now be poised to take a run up to the upper trend channel and this red line? So let me put some more data in and see where that red line picks up. Lo and behold, it picks up to a previous low. And so often, these previous lows on a rally, they almost seem to be magnetic, almost wanting to pull price up to them. So there we are. That's my take on cable. But as we haven't had the breakdown yet, there's a fair chance we are going to get a pretty good rally. And certainly price action yesterday and so far this morning is suggesting that we're going to get it. So
okay, well, that sounds intriguing.
Well, you know, as with all things, we've just got to be patient and wait for it all to play out.
Fantastic. George, thank you. I know
George.
we had just a very short window to speak, but you're joining us again on Thursday for a full webinar at 10 o'clock on Thursday morning. So we'll look forward to that, and you can explain a bit more the methodology behind the system that you use for trading. So George Hallmey over at Click Events, thank you very much indeed for joining us this morning.
Thanks a lot. Bye now.
Fantastic. Thank you, George. Okay, Zach, we're going to go over to John Adamson at sharetalk.com for our his stock of the day, which Focusrite PLC. Let's bring John into the room and say good morning, John. How are you?
Good morning, Simon. Not bad, yourself?
Very well, thank you. Very well. Tuesday already, so racing through the week, which is good. You're live with Zach, and Focusrite is the stock that you've suggested that we put up today to have a look at, and just going over to Zach's screen so that we should be able to have a look at the chart of that in just a moment. There we go. Fantastic.
I hope it's the right one, John. Is this the right one? Tune?
Yes, that is the right one, yeah. So,
keeps people on their toes.
Yeah, before this morning, I had no idea these guys were listed, so I'm well aware of the company. It's one of the few companies I can actually talk about with confidence, is actually knowing the sector very well indeed. So Focusrite essentially live in the professional audio sector. So as a brief stint as a sound engineer myself, I'm well aware of having used the products and owned some of the products in a past life. So they create products such as audio interfaces, microphones. They own the Novation brand, which sort of offers sort of mid-range to budget range synthesizers and samplers used in a sort of bedroom studio to sort of semi-professional studio environment. And they also own the Focusrite Pro brand, which generally owns a number of products that I would call audio processing equipment. So from the higher end audio interfaces to hardware, EQ, effects, etc., pre-mic amplifiers, that kind of thing. So essentially, Focusrite have had their final year results out this morning. Group revenue up 21.6% to 66 million for the year. Announced divvy has gone up 38% to 2.7 pence. Profit up 33.5%. EBITDA up 27.9% to 13.1 million. So we can see they've had a small rise this morning in terms of reaction to that. I think it's a stock not to be confused with. Many people probably look at Gear for Music, G4M, and that has been one of the big winners on AIM
That's
the
what I
last
was
couple of
thinking of.
years. Yeah, I think that's the first stock I think most people will look at and can try and compare, but they're not.
Yeah, but it's a good comparison, isn't it? If you think, well, you sort of think if Gear for Music
it
is
is
doing well, then Focusrite
in a
will do well.
way. What you've got to think is Gear for Music is a company that would sell Focusrite products. So it's not so Gear for Music are selling the whole range of sort of what I was, professional audio equipment, whereas Focusrite will be distributing to Gear for Music. But Focusrite are a market leader in have been for best part of 20 years. So, I think they've still got a long, you can see that in the last year they've risen quite significantly, probably around 100%. So I still think there's got a lot of legs in it though, because the Novation brand is certainly growing very rapidly, and they've also launched a number of apps through the synthesizers and samplers they create with Novation. These apps are consistently in the top 10 music apps available on the Apple Store, and not all of them, but many of these are actually gaining regular revenue. Some of them are free, and some of them tie you in with sort of in-app purchases later on. But to be in the top 10 consistently with more than one product is quite a bit of a game changer, and that's a relatively new venture for Focusrite. They've also expanded into the Asian markets this year with the addition of a new CEO who's coming from Avid. So Avid is like the sort of Pro Tools software for video, if you like. So the head of global sales for Avid has come in as the CEO for Focusrite during this year, and I think that has really helped. They've boosted. You can see from those figures they've boosted the sales significantly and are way ahead of expectations of where they would have expected to be. So I think that trend line looks relatively positive to me, but it's not the kind of stock I normally look at, because anything over £1 a share is not something I normally look at, to be perfectly honest. But my level of risk versus reward is normally a lot higher, but this to me looks a relatively safe bet.
But this is like a buy and hold, really, isn't it? It's not like a quick punt.
It's a longer term hold, sure. Yeah, it's not a just hold for next week like some of my other stocks can be. But it's I certainly think this is a longer term stock. I mean, like I say, I know this industry very, very well, and I know Focusrite are definitely very high up there, and they're not going anywhere soon. Very strong growth figures. They've got 14 million cash in the bank. This is a solid company.
Okay, well, on that note, John Adamson from Share Talk, thank you very much for your offering today. One for the widows and orphans, I would suggest, and maybe we have some more rock and roll next time.
Okay, thank you, Zach.
Cheers,
Thank
John.
you, John. From Simon, thanks very much. Have a great day.
Thank you.
Zach, any final comments for you? We're just about on 9 o'clock.
Yeah, just hope you can see the pound there, 132.40, FTSE just around 73.80, hanging around. And the only thing I note there, which is relatively recent, is the £3 share price target from Stifel on William Hill, which I think had a good update today. And I say that just because the chart looks relatively healthy. I'll quickly get that up, but so possibly against, rather counterintuitively, William Hill doing well. Presumably the punt is not doing so well, but there we'll see the chart in a second, looking rather bullish after a gap through the 200-day moving average earlier this month. But that's all I have for today.
Okay, many thanks, Zach, and thank you everybody for joining us, and we will see you again in the morning.